A $10 AI stock investors are starting to reevaluate in 2026 hook. Opening 10 to 15 seconds, artificial intelligence continues to dominate headlines. But not all AI exposure comes from the largest, most expensive companies. An interesting question investors are quietly asking going into 2026 is this: are there AI-exposed businesses trading near the dollar 10 range that the market may be overlooking, not because they lack potential, but because expectations reset too far? Today, we'll examine one such company using publicly available data and a balanced analytical lens. Introduction. By 2026, artificial intelligence is no longer a speculative concept, it's embedded in enterprise software, automation, and productivity workflows. However, market enthusiasm has been uneven. Some AI-related stocks have significantly underperformed despite continued adoption of their technology. In this video, we'll take a closer look at UiPath, a company often discussed in the context of AI-driven automation, and explore why some investors are beginning to reevaluate it. You'll learn how the business actually makes money, where AI fits into its strategy, what the financial data shows, and most importantly, the risks that remain. This is an analytical review, not a recommendation. Stock snapshot. Company: UiPath. Ticker: PATH. Market cap category: mid-cap core business. Robotic process automation, RPA software for enterprises. AI exposure: direct AI is used to automate workflows, decision-making, and document understanding across enterprise systems. UiPath helps organizations automate repetitive digital tasks. Customers spanning finance, healthcare, manufacturing, and government sectors. Fundamental analysis verified. High level based on recent publicly available filings and earnings reports. Revenue trend: UiPath has shown consistent year-over-year revenue growth, driven largely by enterprise subscriptions and renewals. Profitability: the company is not consistently GAAP profitable, but has shown progress toward operating leverage, with improving margins over time. Balance sheet: UiPath holds a strong cash position with minimal long-term debt, giving it flexibility during slower growth periods. Key metrics: high level, high gross margins typical of enterprise software, strong customer retention, large installed base of enterprise clients. These figures are drawn from company filings and earnings calls rather than projections. AI growth thesis: UiPath's AI exposure is not based on consumer hype, but on enterprise productivity. AI enhances automation through document processing, natural language understanding, and intelligent decision workflows. Enterprises are increasingly focused on efficiency rather than expansion, which favors automation tools. UiPath's platform integrates AI into existing enterprise systems, reducing switching friction. What differentiates UiPath is its focus on operational automation rather than consumer-facing AI, which may lead to steadier but slower adoption curves. Risk analysis: mandatory and prominent, this stock carries real risks. Business risk: slower enterprise IT spending can delay new contracts or expansions. Competitive risk: competition from Microsoft, SAP, and other automation platforms is significant. Valuation and dilution risk: stock-based compensation remains a concern, potentially diluting shareholders. Macro and regulatory risk: enterprise budgets are sensitive to economic cycles, and AI regulation could increase compliance costs. These risks are material and should not be minimized. Time horizon perspective: short term. Price volatility may remain elevated due to earnings sensitivity and broader market sentiment. Long-term outcomes depend on execution, particularly margin improvement and sustained enterprise adoption. There is no guaranteed outcome, and multiple scenarios remain possible. Ethical disclaimer: this video is for educational purposes only. This is not financial advice. Please conduct your own research or consult a licensed financial advisor before making any investment decisions. Conclusion: UiPath represents an example of an AI-exposed company trading near historical $10 levels that some investors are reassessing, not because it is risk-free, but because expectations have shifted. There are clear strengths in its technology and balance sheet, alongside equally clear competitive and execution risks. Rather than offering a buy or sell conclusion, this stock serves as a case study in how AI adoption, valuation resets, and fundamentals interact. Professional call to action: if you value calm, data-driven analysis without hype, consider subscribing to the channel. I welcome thoughtful discussion in the comments, especially perspectives that challenge the analysis. Thank you for watching.